Hey, what's up ICT traders, welcome back to the channel. In this video I want to answer a particular question I normally see from a lot of my subscribers, either in the comments or some of you personally send me this on my DM. All right, how to identify a mitigation block, all the concepts I've been talking about for trade entry. Now it is basically very easy to identify these things for trade entry, and fortunately enough for me, I got an entry. Was it not yesterday, just a day before yesterday? All right, I got this entry on Aussie dollar, and it was a perfect entry for me. So I wanted to just share with you how you can use mitigation block, breaker block, and different other ICT concepts for trade entry. So this signal came in and I quickly shared it with my community, guys. You see, that was the particular trade. I posted it before taking the trade. I said selling from here and then TP hit. If you have made money here, please share your testimony. Since from that day, about 2 days ago, I did not trade again. That was the reason why I have not even uploaded video. So right here, what I have is a perfect mitigation block for entry. This was not the only thing I use as a criteria for trade entry. Let me show you every single process I went through before taking this particular trade. So starting from the higher time frame, I looked at the 4-hour time frame. All right, I started from the 4-hour time frame and I realized that I had a shift in market structure. All right, that was the first thing I did before taking that particular trade. Now, if you look at this, you would see that price is actually bullish. Price did something like this, boom, breaking above this, and then it had a breakup structure to the upside. Price even traded above this level. This guy, can you see this guy? Sweeping liquidity. So liquidity areas are very important points for price, and when price reaches a liquidity area, it will show you sign that it want to go to another direction. So what price did was that price actually reached this area, the buy side liquidity resting here, and price is now showing some sign of going lower. And that was where I got the confidence of taking the trade. Now, when I went to the 1-hour time frame, I saw a better picture of what was happening. All right, I looked at it from this perspective, and then I saw a shifted market structure right here. A shifted market structure right at this point. Let me adjust it correctly so you can see it. So this shifted market structure came in very handy at this point. All right, so I just want you to pay attention to every single detail I want you to get in this particular lesson. Remember, I told you I'll be showing you my trades every step that I took before taking a particular trade. So a shifting structure came in right there, but then price was here. Then price was right there. I was just waiting for price to return back to my premium area. It's very simple and straightforward, guys. This is one thing with ICT concept. It's straightforward, simple, and easy. So I saw price came right there. It was a discount area trading into this liquidity void perfectly. And I said, okay, I want to go bearish, but then come back into this area. I have a fair value gap here, and then I have an order block here. Now, if you look very closely, this fair value gap, some part of it is in the discount area, and I was putting my eyes on the order block. Now, that was when I said, okay, if price is going to come back, I just want to monitor it to come back to this area, and then I will take advantage of it. But I was so interested in taking the trade from this order block because this fair value gap, part of it was in the discount area. That was what made me to go to the 15-minute so I could see if there is any other institutional reference point I can use as a confluence. All right, so right here was what I saw from the 15-minute time frame. Price had a very nice mitigation block. What is a mitigation block? Let me show you. When you have price do something like this, price is going up, and then it came to an area, pushed up, retraced, but couldn't push above the previous high. It fell, but then crashed down and closing below this area, below the higher low. This is a bearish mitigation block. When you have the opposite case, it is a bullish mitigation block. It is simply bearish because we expect it to push price downward. So that was a shift in structure, and then I saw it as a bearish mitigation block. Where is the mitigation block? The mitigation block is basically the last bearish candle or the last sell candle that price printed right here before doing the second push that created the failure swing. All right. So if I put my demarcation here and I say, okay, if price is coming back right here, this is going to serve as a resistance area, or what we call a bearish mitigation block. I will take the trade. That was exactly what I did. I did not do anything special. All right. I did not do anything special. So when price came back, it located this. So notice what I said. The last sell candle that price printed before doing the failure swing. So price printed this last sell candle and then it did the failure swing. Now this becomes a high possibility point of interest. All right, high possibility point of interest. So if price is going to come here, I would expect it to reject price. That was the only thing I did, guys. I did not do anything special. It's very simple and straightforward. And that is why I encourage you to always look out for my videos. So I said, okay, let me take the trade from there, and then I will target just here for my target. That's almost 1:3. And I did not hesitate. I shared it with the community, guys. Once it was here, I shared it, and then they took the trade with me. So when price was coming back, let me show you what price did on the 15-minute. It came, boom, it touched it. All right, it touched it. And notice what I did again. For me to scrutinize it to be sure that this is going to be a perfect trade, I said, okay, let me go to the 5-minute and even see how perfect this one will look like. So I was watching it from the 5-minute and I had another confirmation. Look at what price did. It even shifted structure again here. I love trading because you can predict everything happening. If you are only patient in the market, you will do a lot of things. All right. So patience is something you must have in the market. So I had a shift in structure again and price coming back toward to this bearish order block. All right. So that was another confirmation that gave me more confidence to allow my trade to work out. And then notice what happened. Price played out perfectly, guys, without any hesitation. Perfectly. So that is basically how to take trades, guys. All right. I do most of this recap. Almost every trade I take, I do this recap so you guys can see the power of patience and skills. All right. So the price went in the direction of our prediction. That's how beautiful it is to take a trade with a mitigation block. There are so many examples you can use, guys, out there, but then I'm just showing you one of it right here. If you find value in this video, guys, come to my YouTube channel. There are so many videos that can help you to start out. Look at this. All you need is to come over here. Once you are here, guys, you will do a lot with the knowledge you have and so much value for free. All right, make sure you come over, subscribe, get to know more of my videos, and then learn more. All right, thank you guys for watching. I will be ending the video right here, and then if you have any question, let me know in the comments. See you in my next video.